Welcome to Talks with Dr. Gupta and friends. Today, we're not talking about stock tips. We're talking about how capital follows power. Because every few decades, investing changes its rules, and 2026 marks one of those moments. The question is no longer, which company grows the fastest? The real question is, which companies sit at the crossroads of technology, infrastructure, and cash flow? Let's think aloud. For years, artificial intelligence was a story of stock trade. Big promises, limited profits. That changes in 2026. AI is no longer a demo. It's becoming enterprise plumbing, embedded into software, logistics, finance, healthcare, and manufacturing. The winners won't just build smarter models. They'll convert intelligence into margins. This is why companies like NVIDIA matter. Not as a hype symbol, but as infrastructure. Why Microsoft matters? Because AI scales through distribution. And why Alphabet remains central. AI layered onto monopoly cash flows is a powerful mix. In 2026, AI investing becomes less about imagination and more about income statements. If AI is the brain, semiconductors are the nervous system. Chips are no longer consumer electronics. They are geopolitical assets. Every nation wants supply security. Every company wants performance leadership. This is why TSMC sits at the center of global strategy. Why ASML holds monopoly power over the most advanced machines on Earth. And why firms like AMD matter as challengers in a concentrated ecosystem. Semiconductors in 2026 behave less like cyclical stocks and more like energy companies in the 20th century. Now zoom out. Across the world, populations are aging, labor is scarce, wages are rising. Robotics isn't about efficiency anymore. It's about economic survival. Factories, warehouses, hospitals, and logistics hubs are all automating. Quietly, steadily. Companies who sell the picks and shovels of this transition, like ABB and Fanuc. And then there's Tesla, part car company, part AI lab, part long-dated robotics option. Robotics adoption is slow, until suddenly, it isn't. Here's the truth most investors miss. AI doesn't run on code. It runs on electricity. Data centers are energy hungry. Grids are strained. Power becomes the silent constraint. That's why energy infrastructure re-enters the equity story. Companies which sit at the intersection of AI growth and physical reality, like NextEra Energy, Constellation Energy, and GE Verna. In 2026, energy isn't a value trade. It's a growth enabler. So what does equity investing in 2026 really demand? Not speculation, not day trading, but structural thinking. The strongest companies will be those that control intelligence, infrastructure, and indispensable services. Because capital doesn't chase stories forever. Eventually, it settles where power compounds. That's the real lesson of 2026. This is Talks with Dr. Gupta and friends. Thank you for thinking aloud with us. Happy new thinking and Happy New Year.